Ever felt overwhelmed trying to pick a stock? What if I told you that you could get a solid first impression of any company in just 10 minutes? Today, I'm going to walk you through a powerful, step-by-step process to quickly analyze a stock. Let's start the clock. First, spend 1 minute understanding the business. What does the company actually do? How do they make money? Go to their website, read their About Us page, or check out their investor relations section for a quick summary. If you can't explain what the company does in a single sentence, you might want to move on. A clear business model is a great start. Next, for 2 minutes, we're diving into revenue and profit growth. Is the company making more money over time? Look at their income statement for the last 3 to 5 years. You want to see a consistent upward trend in both total revenue, that's their top line, and net income, their bottom line. Stagnant or declining numbers can be a red flag. You can find this info easily on financial websites like Yahoo Finance or Google Finance. Now let's spend 2 minutes on key financial ratios. Don't worry, we'll keep it simple. First, check the P/E ratio, or price to earnings. It tells you how much you're paying for each dollar of profit. Compare it to the industry average to see if the stock is over or undervalued. Second, look at the debt to equity ratio. This shows how much debt the company uses to finance its assets. A high ratio could mean higher risk, especially in a downturn. Finally, check the return on equity, or ROE. This measures how efficiently the company is using shareholder money to generate profits. A consistent ROE above 15% is generally a good sign. Okay, 1 minute on cash flow. This is super important. Profit is an opinion, but cash is a fact. Look at the cash flow statement. Is the company generating positive cash from its operations? A healthy business should have strong, positive operating cash flow. This means they have enough cash coming in to pay their bills, reinvest in the business, and maybe even pay dividends, without constantly needing to borrow money. With our next minute, let's identify their competitive advantage, also known as their moat. What makes this company special? Is it a strong brand like Coca-Cola? A network effect like Facebook? Or maybe they have patents that protect their technology? A durable competitive advantage allows a company to fend off competitors and maintain profitability over the long term. This is what separates good companies from great ones. Now, 1 minute on management. Who is running the show? Look up the CEO and the executive team. Do they have a good track record? Read their latest letter to shareholders in the annual report. Do they sound transparent, honest, and focused on long-term value creation? Great leaders can make a huge difference, so it's worth a quick check to see who's in charge. For the next minute, zoom out and look at the industry and market trends. Is the industry growing? Are there any major technological shifts or regulations that could impact the company? For example, investing in a company that makes film for cameras in the age of smartphones might not be the best idea. You want to be investing in a company that has the wind at its back, not in its face. Finally, 1 minute for valuation. We touched on the P/E ratio, but let's take it a step further. Use a simple discounted cash flow or DCF model online, or just compare its valuation multiples to its closest competitors. The goal isn't to find the exact perfect price, but to get a general sense of whether the stock is trading at a reasonable price, a bargain, or if it's way too expensive. And that's our 10 minutes. For the final decision, remember this quick analysis is just a starting point. It's a screening tool to help you decide if a stock is worth a deeper dive. If it passed these initial checks, you can add it to your watch list and spend more time researching. If it showed multiple red flags, you can confidently move on to the next idea, saving yourself hours of time. So there you have it, a 10-minute framework to analyze any stock. It's all about being efficient and knowing what to look for. If you found this helpful, hit that like button and subscribe for more investing tips. Thanks for watching and happy investing.